Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about if I were to start over from swing trading, what would I do differently? So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And at the end of this video, we are going to be talking about two stocks that we're holding with an awesome strategy so you guys can kind of learn my approach. So I hope you guys will enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading and trading in the market, check out our school. It's fantastic. We have private live streams, we got quizzes, we got lectures, we got a group chat, we got everything you guys need to get started with swing trading. And if you guys want to learn more, check out our school. Code 2025 to get 51% off, private live streams, quizzes, lectures, all that good stuff. So check it out down below, and let's just jump into this here. So the first thing that if I were to just take a step back, right, and travel back in time with the knowledge I have now, what would I have done differently? The first thing that I would have done is to journal my trades. At the time, I was just kind of trading random stocks at random times with no checklist or criteria or anything like that. But, the second I started journaling my trades was the second I started to realize what was working in my strategy and what wasn't working in my strategy. So I could focus on what's working and kind of just leave the rest and trade the best. And this kind of brings me to my second part is during that, journaling phase, I started to realize I'm kind of just trading too much. I was over trading and I wasn't choosing quality. I was choosing quantity. I was trading every stock because I felt like in order for me to make money from trading, I would have to be in a position every second of every day to make money. When in reality, 99% of traders and successful traders that I personally know, they don't make money off these crazy moves that you probably see YouTubers and TikTokers talk about where they buy a stock at $1 and they sell it for $100 and they do it every day. No. 99% of traders that do this full time, they find that stock at $1 and then they sell it for $1.10 and they $1.05, but they do it consistently and they understand the compounding effect that trading has, where the profits you make today can be used as leverage tomorrow. And so I now focus on just consistency, small returns, and just being very, very, very consistent. So I think that's very, very, very important here. And journaling, honestly, really, really just helped me understand my entry points, why I'm getting in on positions, and all that good stuff. And I'll actually put our trading journal down below where if you guys want to get it, it's awesome. The reason why is because it's a digital journal, so it tracks everything, strategies that are working well, your entry points, all of that good stuff. So the next thing that I want to talk about, if I were to go back in time, I wanted to have funded an account right off the get-go. I actually would have paper traded a lot more. Paper trading is just using simulated money to practice your entries, your exits, your risk management. And what I did is I funded an account of about $2,500 and I burned through it in a month because I had no idea what I was doing because I was trying to be like traders I saw on YouTube. And obviously I had no idea what I was doing. And so I lost money. And yeah, if you guys are watching this and maybe you already funded an account, that's completely fine, but you just have to understand that trading is very difficult. And in order to make money consistently, it requires practice. It requires experience. And I honestly, at the time, I just kind of thought that any stock I bought would go up when in reality, that's not the case. So if you're watching this and you're maybe funding an account and you're losing money, I would highly recommend, paper trading. Just practice, learn as much as you can, and another thing that I want to talk about is you are the results of your actions. You're the result of your actions. What that means is if you don't want to put in the time to chart, to trade, to learn, to educate yourself, you're going to have subpar results and you're going to lose money. Yes, you can get right a couple of times, maybe you grow an account for a month or two, but I'm telling you, in order to do it consistently, it does require education, practice. And so paper trading was a great way that I've kind of figured out over the years to really help me. Now, after you paper trade and you get comfortable, then start small, $100, $200 account, and then try to grow it and be consistent, right? The second that you start making money consistently, it's not about the strategy, it's just about your account size. I always say this on my channel, if you're making $10 a day, the only thing that's separating you from making more money isn't your strategy, it's your account size. So you just have to be consistent and understand the game of compounding. So now let's actually turn to the computer, talk about two stocks that we're holding and why we bought them here. So the two stocks that we're actually in on are ticker symbol GNRC and ENB. So we'll talk about GNRC here first. Now, the first thing I want to show you guys here is the broker. So the broker I use, everybody always asks, and it's Moomoo. It's a trading broker that I've used for years. They offer great charting, scanning to look for opportunity, because you don't just buy random stocks, you buy stocks with potential that are undervalued. And it does offer the paper trading. So if you want to have a place where you can get in and out of positions and not risk real money, check out my link down below, and you guys can get up to 20 free stocks just by signing up. So it's completely free on you, and it's an easy way to learn. But the next thing here is, why did we buy GNRC? So you guys will notice that we have all of these different lines. So these lines are what we call indicators, and they're moving average lines. So what they act as is support and resistance. So when a stock is trading above them, it acts as support, right? So you can see where it's hit it several times, right? And we've gotten buying pressure here, 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 right near and around all these support lines, and it never dips down below this red line here. So the difference between all of these here is very simple. The yellow is the 50-day moving average line, the blue is the 90, and then the red is the 200. The 200 is going to be a harder support and a harder resistance. So, when the stock falls below it, you can see where it hits these lines, and it just has a hard time breaking up above it, compared to when it's above it and it's established support, we have higher indications of buying pressure. Okay, so now the next thing here is this green line down on the bottom. This is what we call the RSI line. This pretty much tracks momentum. You guys can see that at the time it was trading for near and around a 21, which the last time it was trading for 21 was right in here. And what happened? The stock went from about $80 all the way up to about $107 in about 4 days. So now here, what do we have, right? We have a stock on an upward trend, sold off down to a support line, which is the moving average line, which is a support. It's undervalued on the RSI. The next thing here is going to be a trend. Trends are probably one of the most underutilized things traders don't pay attention to. And in order for me to classify it as a support trend, we want a minimum of 3 touches of buying pressure on it. So you can see 1, 2, 3, 4, 5. So we know that each and every time it has good tendencies of getting buying pressure. So now the stock sold off down to the support, and also that same support here is what? The same support is the 200-day moving average line. Okay, so now what do we have? We have a nice little checklist. And that's when you first start trading, and this is what I really lacked, is that checklist. So you go in and you go, okay, before I buy this stock, I want to make sure it's on an upward trend. It's on a support line. It's an undervalued RSI. And another thing that I always look at is going to be a lower time frame. So at the time here, we're trading and we're looking at the daily time frame. So each of these candlesticks represents 1 day of trading. So you can kind of see, the biggest moves, the biggest swings of the day. Now, the next time frame I look at is going to be the hourly. Some traders look at the 4-hourly. I'm not a huge fan of that, but nevertheless, it's still very, very similar. So what I look at here is going to be a breakout. So let's remove these here. And what do we have? We have this nice and steady downward trend where it's hit this line each and every time and is establishing resistance. So we don't want to get in until the stock is pretty much above this trend line. So we saw this huge sell-off here where the stock went from about 166 all the way down to about 153 and kind of formed this nice support, right? Where it just hit this 152 mark several times and it established buying pressure. So that's exactly what we entered on. We entered near and around that support, keeping our stop loss about 1.5% from the current price for a possible push back up to resistance, or at least up to realistic levels I would say near and around 179, gives a risk and reward of about 11 to 1, which is really good. You're risking $1 to make $11. So now the stock has squeezed up, it's broke out, and it's looking really, really well. So every time the stock creeps up a little bit higher, we just continue to adjust our stop loss. So as of right now, our stop's going to be near and around 157 for a small 3.5% gain, which I'll take any day of the week. You know, a lot of traders that watch videos, they go, Carter, you only made 3%. Hey, if you make 3% every single month, you are better than 95% of all traders in the world. So doing this, I'm very, very happy with that. All right, the next one here is very, very similar, but a different approach. So this is ENB. ENB here has had heavy support on the blue line and the yellow line, which is the 90-day and going to be the 90 and then the 50-day moving average line. You can see in the past where it's hit these lines, boom buying pressure, sold off down to here, which, you know, is that support, good upward trend, undervalued on that RSI. So looking at the you know, the 1 hour chart, you'll notice that this has that same downward trend. You don't want to get in on this trend because the trend's going down. You always want to get in on upward buying pressure. So now here the stock popped up. The best entry point would have been right here. Okay. And I'll be completely honest. We missed that move. We missed the move on this. Okay. And where we got in is on confirmation of a breakout. So if we didn't get in here, the next best approach would be up above these moving average lines, because each of these moving average lines are resistant. So we could see sell off here, we could see sell off here. So getting in above it, keeping our stop loss just below it to ensure the support of these moving average lines is exactly what we did. And the stock has rallied its way up and now keeping our stop loss below about 153, or not 153. $43, excuse me. And this is just a textbook trade all day long of just basic understanding these moving average lines. You know, if we look back here, we'll see a very similar situation, right? Where the stock actually formed this very similar trend. Well, and don't worry, we'll remove these moving average lines. Very similar trend, hit it, sold off here. You know, good breakout here, which is really, really nice. And let's remove this and see these moving average lines. Popped up above it, this would have been a very good entry point, followed by great buying pressure. So now we're just kind of keeping our stop loss, right, below here and or that 50-day moving average line. We'll see how it reacts with it and if we get immediately, you know, sell off. But when we're up handsomely, you know, I have no issues thinning out some of my profit and holding some for some nice longer returns. But this is a simple thing that you guys can start doing to start making money from trading. These are simple strategies. And if you guys want to learn more, check out our school and you guys can get 51% off by using code 2025. So click that link, sign up, and we'll see you guys in there. But like, subscribe, and take care, everyone.